Welcome everybody to the Chinchilla Pickin' Podcast. It is February the 2nd, 2025 at 4:09 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the originator of Antisocial Club, Brandon Beaver. Brandon, how are you?
That is me. And I
Nice,
am in the
nice.
midst of being the most antisocial that I've ever been, so I'm great.
I've heard that for homebodies and people who are typically, they dread going to public events or anything, that they actually charge their batteries from being at home and just kind of chilling out.
Yeah, yeah.
Yeah, it warms you up.
Yeah, I might go read a book just so less people talk to me. And see, my girlfriend's going to be mad at me now if she listens to this because she's the only person that will talk to me. So the only person I can cut out of the equation is her. Love you, babe.
uh, yeah, I just love it. Every time I invite you somewhere, I'm like, okay, we got a pool going on his excuses he's gonna give.
And people wonder why we never have any guests.
Oh man, nice, nice, nice. All right, seriously though, seriously. It was a busy week. A lot happened. Yeah, I mean, we're gonna talk about it, so I'm gonna mention it now because I have it on my list to talk about, and I feel like we have to mention something about it. We're eventually gonna get into Deepseek and AI, and that whole thing that happened, and the what was it? Almost $1 trillion in value that first day lost.
Yeah, yeah, yeah.
That
But
was
for some reason, Meta increased in value.
Well, I mean, we're gonna get into that
I'm
because I
telling
have
you,
I covered Meta's earnings, but I was picking and choosing what I wanted to cover out of Meta's earnings because it had a lot to do with AI and growth and not growth and so on and so forth. So
this isn't me bragging, so don't take this the wrong way. But Friday, I just assumed that the rest of the market did really good because I had an incredible week for equities this week. And then I looked at the stock market and I was like, oh, that kind of sucked actually. It was pretty crazy.
yeah, yeah. So talking about that last week in January, because I've mentioned this every year in January, the January barometer, right?
Hmm.
I talk about this 75%, was it 80 or 75% of the time? Anyways, it's right a lot of the time, right?
Right.
And it takes the whole month of January. And if January is up, the markets will be up for the year. So most of the time, it's correct. So going into last week, the markets were up. Last week, the markets took a hit. The market still, the S&P 500 still ended up for the month of January. So according to the January barometer, the markets as a whole will be up for the year of 2025. If you go by that, it's
Okay.
like the farmer's almanac of, the stock market.
Yep. Yep. There's one unpredictable thing that you're going to get into in a little bit.
Yeah, and we're going to
Just
talk
throw a
about
wrench
it.
in the whole thing.
We're going
Yeah.
to discuss all the possible implications, how to invest your money, what would you do about it if anything. Maybe you don't do anything about it. We'll get into it. We'll get into it.
Yeah. Yeah.
But for
So
right now, go ahead.
yeah, I was going to say for right now, let's talk about last year and we can kind of talk about what I'm going to go through and then I'll transition to you.
There, right,
Yeah.
and that means you have to cut your hair if you're going to transition to me. Um,
I got to shave
so, all right. So, rules. The rules are Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show for you.
I, you know, I, uh, I like my life, so I don't want to transition into anybody, but I would like to transition to your bank account.
You can. You have to take more risk in your portfolio. Your portfolio grows. It does. You do a
Oh, it's
great job. You
nice.
beat me. Percentage wise, you beat me last year.
Yeah.
Percentage wise.
Yeah.
So you're doing excellent. It's just my first few years, when you're under a certain limit, right? Your first few years, you have to grind it out and just take. I did it. No, you don't have to. This is not the way everybody does it. I took bigger risks than probably what I should have done, but it turned out in my favor. So you could say some of it was luck, some of it was skill, and that's how I got there. You know what I mean?
Okay. Yeah.
You know, so no matter what, I'm here. You're beating me percentage wise. So last year, so I need to be listening to you and probably figuring out what's going on with Brandon's head and how you're finding out the ones you're finding out.
Well, I will say this though. I beat you in individual equities, but a large majority of my money is in two separate retirement accounts that I'm largely rethinking because I am outperforming those by multiples. I mean, by a lot. And those are just under being in line with the market. And it's
So
disappointing. But at the same time, do I withdraw that and then take the early withdrawal penalties and pay the taxes on it because that's incredibly bad, right? I'm going to wind up with half of the money that I have now if I do it that way. So then, what's my? Go ahead.
so here's my thing on this, right? So this actually is a real life question that real life people come up and ask, right? People in their 30s and their 40s, they have retirement accounts now. They've been having them for a number of years. They've opened up the separate brokerage account. They put some money in. They started listening to us. We've mentored them on the side, giving people advice. There's lots of people. There's a number of people that Brandon and I give advice to personally, and then they start seeing the growth there. And now they start to question, okay, I have all this money. I could be making more money on my own. What
Yeah,
do I do? Right? That's a
right.
real question. This is a real life question. And here's my take on it, right? If you have a 401k at work and they have a Roth option, that is the option I recommend personally you take every single time. And here's my thought on this. My thought on taking the Roth versus the pre-tax is the fact that and typically in my personal life and my personal experience, my taxes have always gone up on me year over year. So if my taxes have typically gone up year over year for myself personally, I would rather just go ahead and pay the taxes now and get it over with, and that way I know the money I have in there is already been taxed, and then I don't get a penalty when I withdraw it early from a 401k because I've already been taxed on it. It's my money. I only get a penalty or a tax if I draw out the interest earned on it.
Gotcha.
And
Okay.
so for me, I always recommend a Roth 401k just for that reason because you never know what happens in life.
Right. Right. Okay.
Now, your other account, I'm sorry, I know what it is. I'm not going to delve your personal life here on the show for our listeners, but that one you're just kind of either stuck with it or you take the penalty, man.
Yeah.
There's nothing you can do about that.
Yeah. And I've been lazy. I need to roll it over so that I have one because I'm paying, fees on both of them.
Yeah.
And the only reason why I've ever had a 401k is the company match. If I didn't have a company match, I wouldn't even do it. It's not even
Uh,
worth it because you got to pay fees. You're going to be in line with the market at best. Most of the time you're not. Most of the time with 401ks you're like 10%.
yeah.
So,
And so what I did a good TikTok video on, and it's on Instagram Reels, Chinchilla Picking Podcast or Chinchilla Picking. Look us up on TikTok or look us up on Reels. It's on there. I did a good video on 401k. Um, Yes. And so we have this show, Brandon, and this is really contradictory of yourself,
I
is
know.
that we have this show to teach people how to do better on their own, give real life examples, explain things down at a basic level so that everyday man or woman can go ahead and beat the market consistently on their own. And here you are like meeting the market in one part of your portfolio.
I know. Well, it's because I opened it up with the company match. The company match makes it worth it. It's free money. But then after you leave that particular company and then you're stuck with that and you're like, "Oh man, this is not so good anymore."
Right? Yes. Yeah. I hear you. I hear you. Yeah. I mean, yeah, I've always done the Roth 401k with, like you said, company match
Yeah.
at any company. So
All right. Well, that was something we didn't plan on at all. But
not at all. We did not talk about that plan. That was off the cuff, spur of the moment conversation there. You're welcome.
yeah. Yeah, well, you know what? I also read a article too. How much money should you have before you hire a financial advisor? And the answer is if you could teach yourself stocks and equities and how they work and bonds and all that good stuff. Never hire a financial advisor. They're absolutely worthless, in
right?
my opinion. Most of them, some of them might be good, but most of them are, and most of them are not gonna. They're not gonna beat the market for you. They're not. They're not gonna do well at all. There's all kinds of incentives that they have to meet that are actually antithetical to growing your portfolio in a meaningful way.
So let me translate that. Their bonuses and pay is actually made in a way for most of them, not all, for most of them to push products from the companies that they get the highest kickback on, if you will,
Yes.
and not actually try to grow your portfolio as much as possible, as fast as possible.
Yes.
That's actually not the goal,
And they are incentivized to buy the momentum stocks and not to buy undervalued stocks, which is a problem too.
right?
Because if there's a stock that's not doing so well, but then you eye it and you see, well, wait a minute, this like Meta was, for example, 3 years ago with the whole Cambridge Analytica thing and all of the headwinds that Meta was facing when I bought Meta, most of those fund managers wouldn't have done it because they wouldn't want to lose their job.
Yeah. 'Cause, I mean, it would totally go against their job. It would totally go against what their boss wants. The company has a push list, and even if you go to a smaller firm, it's probably the same thing. That smaller firm still has to run their trades through a bigger firm, and that bigger firm's going to dictate to them which ones they're going to get the most money for.
Yep.
So there's all kinds of ways that these companies all move these things around. There was a whole thing about the Robinhood scandal back with GameStop back in the day. If you watch that movie, it's a fun movie. I loved it. It was great. I watched it with my daughter. Um, but I mean, it's called Dumb Money, I believe, on Netflix. Check it out. But I mean, there's all kinds of different things that most individuals don't understand or see. And I always find that it's I had a boss recently. I'm not gonna mention his name, but like he was all about like I gotta go talk to my financial advisor about this, that, and the other. I gave him a couple stock picks. He brought it to his financial advisor. And he said, "Oh, those weren't good." And if he invested, he would have made a lot of money. And I'm just
Yeah.
like, your financial advisor is not actually giving you the best advice,
Yeah, I was pouring money into Meta because I was going lower and lower. I sat through like 20% losses. I kept buying and buying and buying. And if I would have been a financial advisor, I would have had customers calling me. I've had my boss on my back, like, what are you doing? You
right?
know? And that would have been, 3 months of being very uncomfortable.
Right. And I've had financial advisors tell people who listen to us, I've recommended stocks and they go back to their financial advisor and say, well, but he said, don't buy that. That's at a 52-week high. And I
Yeah.
looked at them. I said, look, the fundamentals show that this is about to blow the roof off. Yes, it's at a
Yes.
high, but I firmly 100% believe in this company is going to go even higher.
Yeah,
And this is
yeah.
why.
The 52-week high and low thing, that's why you have to take that with a grain of salt because even if it is at its 52-week high, it could be still inexpensive compared to the earnings that the company's bringing in and what the future holds for them.
Right.
So, yeah.
Yeah. Nvidia, what, a year and a half ago was at a 52-week high. Imagine if he said, oh, I'm not going to buy it now because of that.
Right, right. Or when everybody hated Meta. And I hate to keep bringing it up. It's one example, but it's, the best performing stock for me over the past couple of years. I've more than four times my money on it. So,
Yeah,
but
I had another company, another gentleman I worked with who bought Cooler, Kulr, right? He bought it around 60, 70 cents a share. I said it's a penny stock, got some great, positive things going for it. It might just take off, and here's why. And I explained the whole business idea. And I said there's a lot of potential here in this company, but you might not see returns for a few years. You may have
right.
to sit on this. Well, he
Makes sense.
sat on it for a year and a half, and then every time I saw him, Cooler's not moving today. And I told you, the potential in this company is tremendous, but you might have to sit on it for them to commercialize a lot of this product. It's brand new. I said half their product line is not even ready for commercial sales. I'm
Yeah,
like, you have to wait, dude. Like you're buying it before everybody else does. And
right.
sure enough, after it jumped up to like $5 a share just recently, I haven't heard a word about it from him.
I wonder if he sold too early.
I don't know, but I texted him as soon as it was like well, in the $2 range and on its way up, and so
Right.
he was fully aware of it. But yeah,
Right. So we're going to transition into something completely different real quick. Let's talk about the last year. Okay. The last year, of course, I thought we were going to be in a recession. I was wrong, which I'm happy to be wrong. I said I would be happy to be wrong. I'm happy about that. Right.
I'm
So,
happy to be right, even though I flip flopped throughout the year. I
yeah,
did flip flop.
we were on the verge and then not on the verge, and there we were at a turning point. And I think that we've gone beyond where higher interest rates could turn us into a recession now. I don't think that's going to be a problem anymore. Unless they increase interest rates, unless there's inflation down the road, I don't think the interest rates at the Federal Reserve has, brought us up to. I don't think that level is going to cause a recession. I think we're fine at the moment. And I think we're beyond that point. Last year, the economy grew about 2.5%, which is good. That's right in line. Um, and then we had earnings from Visa and Mastercard over the past week that kind of, falls in line with that. So, with Visa, they had 9% growth for the December quarter, up from 8% in the September quarter. Um, Retail, travel, entertainment, discretionary areas actually were the biggest growers within consumer spending, which is a big surprise. That discretionary was one of the biggest growers for them.
For Q4, why is that a surprise for Q4? That's holiday season.
Yeah, but year over year. This is year over year at this point, what I'm talking about. I know I just said quarter to quarter, but now when we're talking about the largest growers was year over year. So,
Mm.
yeah, improved outlook for the full fiscal year. They're expecting low double digit growth, which is good for Visa. Um,
Do they separate debit and credit card transactions?
you know what? I didn't see it in the earnings report, but that doesn't mean that they do or don't. I don't know.
Because I'll be interested to see like the growth. Is it all in credit, or is that people just using their debit card?
I mean, it might be. I would expect that it's a lot of debit, but I don't know.
Just questions. Just
Yeah.
questions.
Yeah.
I would have asked Brandon if I was researching this.
Yeah. Revenue came in at 9.51 billion. That's a 10% increase year over year. Earnings per share $2.75. That's exceeding $2.60 a share. They said value-added services had a revenue growth of 18%. Fraud prevention offerings is big for Visa. They recently closed a deal to buy a company called Feature Space in order to prevent fraud. That's a company that was fraud prevention. They bought that. They're integrating it into their services. And Mastercard did the same thing, by the way, with another company. And the whole idea, these two companies, what they do is instead of tracking down, fraudulent transactions that have already happened, the idea is to prevent the fraudulent transactions before they happen using artificial intelligence. Um, let's see. So commercial payments represented a 6% growth during the quarter. They said that they're enthusiastic about new flows and especially business to business payments. Cross-border volume increased by 16%, processed transactions increased by 11%. So altogether, I mean, great news for Visa, great news for the economy. Mastercard had similar earnings here. Um, they saw a 10% increase in the United States for switch volumes within the first 4 weeks of January compared to 8% growth in December. Let's see. MasterCard stock did rise 3.1% on Thursday. Visa stock increased 2.1%. Shares of Block and PayPal Holdings rose respectively um, in tandem with these earnings reports. January's volume for Mastercard was flat compared to December. I mean, actually, probably good news because December was the holiday quarter. So, um, full year guidance, they expect low double digit revenue growth on a GAAP basis. They predict about 12% growth but the forecast adjusted for currency headwinds is considered to be more accurate here. Again, the fraud prevention aspect of Mastercard following the trend of Visa. Um, they say that there's a growing demand for these services because of the increase in digital transactions and cybercrime, and that they also have a competitive advantage when it comes to artificial intelligence because of the large data sets. Their recent acquisition, when it comes to that, was Recorded Future. That's the company they bought. So they're kind of, in competition with Visa on the fraud prevention stuff. But altogether here, great news. If you could understand it through all of my stuttering that I just had, it's great news for the past years. Good news on the economy. Visa and Mastercard's performance mirrored that. The only thing that could get in the way, Dave, is ourselves.
Well, I mean, here's a question here. So, do you think both companies are investing heavily in fraud protection due to the trouble that Zell's currently good possibly get into with a federal lawsuit and other companies like Venmo and so forth, and Visa and Mastercard are trying to up their cybersecurity and fraud and everything else departments?
Absolutely, it's a huge liability. We're talking about a duopoly here on this market. I mean, American Express is there too, but they're, the nearest competitor and they're pretty far away from
Well,
Visa and
what about the
MasterCard.
Capital One Discover merger? I mean, that's got to be huge because now Capital One doesn't have to have a Visa or a Mastercard; they have their own with Discover. And
Yeah, we'll
Capital
see
One has
where
a
it
big user
goes.
base.
I
Capital
mean,
One's a
it could be a future headwind, but for right now, Visa MasterCard's a duopoly, and they only make changes when they absolutely have to. So
all right. You don't think American Express is a competitor with them?
they are a competitor, but they're pretty far away.
Okay.
Yeah.
All right. Fair enough. What else you got?
Well, that's what I was transitioning to you when I said
Oh, that
the
was the
only
transition.
thing.
I was looking for some. I thought you had this great transition set up, and that was it.
It
My
was
bad.
good. It was good. The only thing they could get in our way is ourselves.
Boom. That was
What
my
did we do
cue. I
yesterday?
didn't. Yeah, that was my cue. I am so. I missed my cue. I'm failing at this podcast. Wow. All right. Wow. Yes. Let me talk about getting in the way of ourselves here, huh? So, please keep listening. We get better. I trust me. All right, so let me cover a couple articles. There was lots of articles for me to pick from here. I just want to say there was a million of them. You guys know I love articles. I love reading articles. I love quoting from articles. Articles are not set in stone the whole truth. What most articles, is one author's. He presents some facts. They present an opinion and then a guess, and that's typically what you're going to see from most articles. So you can pick and choose articles to prove whatever you want. I've talked about in the show because I've brought up, Brandon, on the show articles that had two exact opposing views from the exact same company, just two different authors, and I forget what it was, but like I'll give a really hyperbolic example here of what I'm talking about. It was on, I believe it was on CNBC, where it had one article that said like the sky was blue, and it had another article from the exact same week that said the sky was green, and it was like, you guys are putting out the two articles that just completely contradict each other. But anyways, that's enough about articles. Let's get into them. First one came out today at 12:43 p.m. on the Reuters Newswire. The headline reads, Trump says Americans could feel pain in trade war with Mexico, Canada, and China. So I picked this one out because it's got some good numbers in it. It kind of breaks it down the best. That of all the ones I read a lot today. So I have a lot of information in my head rattling around, ready to go here. But I knew I was going to talk about tariffs. I knew I was going to talk about what's going on. Let's go into a couple things here, right? So on January 20th, Trump started his presidency, and he came out recently and said he was going to impose a 25% tariff on imports from Canada, Mexico, and China. He went in to say that this had to do with fentanyl, and that was the main one of the main reasons behind it. Canada and Mexico immediately vowed retaliatory measures after Trump's announcement on Saturday. China said it would actually challenge Trump's 10% tariffs at the World Trade Organization and take unspecified countermeasures. Critics are saying that this is going to hurt America and their trading relationships with other countries around the world, not just Canada, Mexico, and China. The go into some of the reasons why USA is doing this. U.S. has a trading deficit with Canada, Mexico, and China of $36 trillion.
Doesn't
So
matter. Go
that's a
ahead.
that's
Sorry.
well, Brandon. Let's get the facts. Let's give some opposing opinions first, so that our listeners can get the full picture and make up their own mind, huh?
Mhm.
Um, so when asked, what do you mean by some pain? Trump did not specify what he meant by some pain. A model gauging the economic impact of the Trump tariff plan from EY chief economist Greg Dacko said that it would impact the U.S. Economic growth by 1.5 percentage points this year, and that it would actually throw Canada and Mexico into a recession and possibly usher in stagflation, higher inflation, stagnant economic growth is the definition of stagflation here in the United States, possibly. So, with only 2 days before implementation, the tariffs look like they're actually going to take effect, even though a last-minute compromise could can't be ruled out. That's from Goldman Sachs and their chief economists. Um, a lot of different things with this. China pushed back, saying fentanyl is America's problem. It has nothing to do with us. And you got a lot going behind here on these tariffs, right? So Trudeau, he's currently the prime minister. He is stepping down, but he is currently still the prime minister. Said on Saturday evening that Canada would respond with 25% tariffs against the 155 billion of U.S. goods coming into Canada, which includes beer, wine, lumber, appliances, beginning with 30 billion taking effect on Tuesday and another 125 21 days later. Mexico did not release any statements of their retaliatory cause. And Trump imposed only a 10% duty on energy products from Canada after concerns raised by oil refineries in Midwestern states. So that's the first article. Brandon, some quick thoughts before I get into the next one.
No, I mean it's just I mean there's no argument against the fact that this does hurt our trade relations with countries, not just the ones that we targeted here. The Chinese thing, we just increased the tariffs on them by 10%, I think. And I believe they went into effect yesterday, right? I think it
From
was yesterday.
what I'm reading, all the big tariffs that he announced at that big meeting are going to affect Tuesday.
Okay. So there's a lot. Um,
I mean,
yeah,
do you agree with the 1.5 percentage point hit to our GDP, or do you think it's going to be bigger than that?
I don't know. I think that's a guess that there's a lot of X factors too, like millions of X factors, not
Well, I'm
just
sure they had some smart quants in the room saying, "All right, if we impose a 25% tariff on, let's just say cars, right? Then
yeah.
that means that's going to drop sales by 30%. And then what would that do to the American economy as far as like, okay, we need less salesmen now. We need less people, working to transport these cars because we're selling less cars, so on and so forth. And the quants would work that out. A quant or a quantitative is a job at a financial company where their main goal is to basically work the math.
Yeah, well, here's the issue with that I see is I don't know how they came to that conclusion. So it's hard for me to agree or disagree with it. And there's the X factors. For example, let's take the tariffs on avocados, right? That were announced, because that's part of it. We're not just talking about avocados. We're talking about everything that uses avocado as an ingredient now. And we're not just talking about prices here in the United States. We're also talking about supply chain disruptions now that are going to happen, that are probably going to pressure prices even higher than what, tariffs would do on their own. If we were to increase taxes here in the United States domestically, that would, of course, increase prices. But when we're doing it internationally, not only does it increase prices for the same reason, but then also you have the supply chain disruption, which affects supply and demand. But then at the same time, how many avocado producers do we have here inside the United States that are going to be able to provide some sort of competition where the avocado producers in Mexico are going to say, hey, we need to maintain our market share, so we're just going to eat the cost of the tariffs ourselves? You have to ask that with all of these different products, which is why I'm mostly against government intervention in markets in the first place, because there's all kinds of different side effects that come about that no one person or no one entity could even predict.
Well, I mean, and what President Trump has floated as a way to, if you will, counter any price increases due to tariffs is to get rid of federal income tax because the tariffs will be bringing in enough money for the federal government.
It's still going to affect the supply chain. It's still going to affect the supply chain. It's still going to affect our relations with other countries. It's still the start of a trade war that I think we have not seen the end of yet. I think we're just at the beginning of it. Um,
Yeah, I
and
mean, I'm not going to say I agree or disagree with anyone right now, but I want to ask the questions, right? Because it's
right.
obvious which side you're on right here. So let me play the devil's advocate for a moment. Like you're saying, disrupt the supply chain, but how?
Well, I mean, you could, if it costs you more to ship to the United States, you're going to ship less to the United States. It takes the profit incentive away, or at least it lowers it.
Right? Because the products you ship, you're probably going to sell less of, right?
Yeah, yeah. And people that say that it won't, they're doing magic math. It doesn't make any sense. There's a lot of excuses, a lot of people trying to wrap their heads around this, and a lot of people trying to say, yeah, but this or this could happen or might happen. But just on the face of it, that is the cause and effect. It's going to lower the supply here in the United States, which I don't like. We just recovered from COVID.
So if the United States buys less and China, Canada, Mexico ship in less, that means they are actually producing less. China, Mexico, and Canada produce less then because they're not going to ship in as much. So why make as much? Do you agree with the economists that are saying that that's going to put those three economies into a recession?
I don't necessarily agree. I mean, it might, but what if they find another country that's growing, pretty exponentially, and they say instead of shipping this stuff to the United States, we're going to go here instead?
I mean, and that's great. That's great for them. Here's and I have a more balanced approach. I'm not one or the other here. I'm not to the extreme on, no tariffs whatsoever, or let's just tariff 50%. You know what I mean? I'm more in my personal belief is more balanced. But, if they ship to another country, that's great for them. But there's not many other ones that buy as much stuff as the United States. We are the number one consumer nation in the world, and that's a fact. We spend
Yes.
more money here on other countries' goods than any other country in the world, and that's a fact. We buy more of China's goods than any other country in the world. Even the European Union as a whole, we buy more than all of them combined as a whole, and that's another fact. So to lose us as a customer would be a huge hit to any economy that's dependent upon making money off of sending us stuff.
Yeah. But
So
I mean,
a country like China can't lose us as a customer, but they have to save face, right?
right.
So they got to do something.
Well, here's
So
the other problem, though.
where's the compromise? Where's the
We're not the
balance?
customer for China. We're the customer for the companies in China. That's the difference. And so politics is way, way more different than business. Unfortunately, these people stick to their guns because it's politics and they don't want to admit to being wrong. And when there's this, how do I put this in PG terms? Peeing match,
Yes.
urination match, seeing who could pee the farthest between two world leaders of countries, things can get very, very, very ugly in order to prove who's the biggest and the best. Look at Europe and Davos right now. They're facing large amounts of stagnation in Europe. Not a very good, not very good economies over in Europe right now. There's no change
Yeah.
from the leadership in Davos. They were sticking to their guns in Davos, and oh, they're right, they're right, they're right, they're right, no matter what the facts prove. And if we were buying and selling from President Xi in China specifically, and he was the one that was profiting or losing because of this, it might be different, but he's not. He's not going to lose any money over this.
So but here's my argument though, is Canada especially. Canada is trying to act tough and impose these tariffs on the United States goods, but we don't ship enough over there that it's really going to impact most U.S. Companies as badly as they think it will. It will impact some very heavily, but most not that much. And so it's like us giving Canada. I'm going to go with the Canada example here. A nice three punch combination, and Canada's we're trying to punch us, and we're just that big, huge giant that he's just punching his stomach, and we're not even moving. Like it doesn't even phase us. So the tariffs that Trudeau's put on us is not going to phase us. So that trade war is not really a war. That's just us kicking them around.
Not yet, but they're still talking with Mexico about how they can retaliate. And I mean, there's small things that have just happened, like the mayor of Toronto just took American liquor off the shelves, how do you even have the power to do that? So I don't know if that's going to last, in Toronto, if that'll spread to other areas in Canada. But there will be more retaliation measures that are taken here.
So hold
And
on, hold
what
on.
struck me is the last time President Trump was in office, during his term that started in 2016, his tariffs that he rate that he pushed on China, there were exceptions to it. And this 10% increase, there's no exceptions, not even Apple. Smartphones, everything that's coming out of China, smartphone steel, all of it.
Well, I mean, so Apple's not doing well in China anyways right now with their iPhone sales. The services is what's holding that company up right now based off their last earnings report. But Tim Cook's been at Trump's beck and call recently and trying to go ahead and stop these tariffs from happening, but he went ahead and went forward with it.
Yeah. And you're correct about that. As far as Apple not doing so well, that's because China was having a recession. There's intense competition from Huawei, if I'm pronouncing that right.
Why?
The
Yep.
Chinese, yeah, the Chinese cell phone company. And I don't want to, I'm coming off as extremely against tariffs because I am, but I don't want it to come off like I think sell all of your stocks, this is the end of the world kind of thing either.
So yeah,
Uh,
let's bring it home to that. What do you do if you're an investor like a retail investor like us?
well, the only thing you can do right now is kind of sit and watch. You might want to take some of your money and put it into another, country internationally, but you need to take some time to research that country. I'm not saying all of your money, Dave, but I don't think Argentina or India would be bad investments, but you got to figure out what companies to go into. You kind of got to get to know the culture of the company too, or country, culture of the country, and how their government acts, and what kind of regulations and things like that you'll be facing. Because you don't want to jump into a China situation head first, like I did a few years ago, and then be very sorry for it in the end. Um,
I mean, I did too with Didi, So I mean, we've both made mistakes in China before trying to invest in that. But Argentina would be a great play because China's still got to sell their goods, and they're going to look for another country to go to.
but this isn't the end of the world here. This isn't, automatic. I'm not jumping right into saying this is going to cause a recession. I mean, the thing that people bring up a lot of the times, the Smoot-Hawley Tariff Act, which is what President Hoover enacted in 1930, that was a 60% increase in tariffs. 60%. And that was on top of a 40% increase that was already done in 1922. So that was extreme. And a lot of economists point to the Smoot-Hawley Tariff Act, and I agree with them. And they say that this is what turned what would have been a recession into a global depression because it was a trade war that came about because of Smoot-Hawley, and that was 60% on top of what was already a 40% tariff hike. That's not what we're seeing here. We're not there yet, but it could get there if the leaders of the free world and even China, which maybe not necessarily so free, um, dig their heels in and start trading punches. And China and Mexico gets involved in the European Union and all of them too. And things get worse and worse and worse when we go down that rabbit hole.
So
We're not there yet.
I'm gonna interrupt your monologue here for a moment. Um, yes, so I believe immediate short term day trading scenario. Monday is going to be a red day unless
Yes.
there's another catalyst I missed. Monday will probably be a red day in the markets, and people are going to digest the news and then see how this actually is going to fall out into companies. Like you said, take your time and watch, and then some companies will jump back up because it's not going to be a big effect on them.
Yeah, there's
They'll
going to
have
be
time
some
to
that there'll be
go
some
ahead.
that decline that don't deserve to decline.
Yeah.
Yeah,
And
that was.
I look at it as a buying opportunity for those if you could find those. And so my advice is be patient, do your research, look for that diamond in the rough, and you can make some quick money. By quick, I'm talking 5%. I'm not talking 500%. I just want to clarify that 5%. Um, and then maybe you can find some good ones that were long term investments on your watch list that now would be a good time to get in because they had a short dip and you wanted to buy them anyways.
Yeah.
So, things like that.
A little bit more of a history lesson here. Prior to 1913, before the United States enacted the federal income tax, most of the federal government's revenue came from tariffs.
Yes.
So we were a lot stronger there on tariffs. And after World War II, we started to go towards a freer trade environment. We had a unprecedented growth here in the United States and really across the board throughout the world. That was partially because we were leaning towards free trade with our allies. Um, and I just think the results of that have been great. Look, the past 40 years, the United States has had trade deficits, and we've been the country with the best prospects and the best economy in the world because all that money that we think is lost is actually just reinvested here in the United States anyways. So
A lot of it, yes,
I,
yes.
I don't
Not
want to
all,
change
not
that.
all.
I don't want to change that, but I also don't want to be a doomsday sayer here either and say, oh, we're going to go into the Great Depression because we're not even close to that yet.
Yeah. Like the economist I quoted said 1.5% ahead to GDP, which would still leave us at a positive GDP number.
Yeah, but
So it would still be growth.
that's pretty bad. 1.5% hit to GDP when we're used to growing 2.5% year over year. Um, that's a large percentage of our percentages.
Yes, that is true. I want to move on, so I'm just going to do a hard cut here. All right, because there's another big topic that came up this past week, and I want to mention this, talk about it. For our listeners' sake, I don't want us to have an hour and a half podcast here, so I want to spend just as 5 to 8 minutes here on this last topic before we end the show. So this is something I did a quick TikTok about it. Thank you guys for all liking the TikTok and putting it out there. I also had it on Reels. Deepseek AI, right? We all saw the articles came out. We all saw the $1 trillion hit to technology companies after the DeepSeek news came out. If you haven't heard, I don't know anybody who would be listening to our podcast you didn't hear, but just in case you didn't hear, DeepSeek is a Chinese startup company that started up just a few years ago, and they claim to have they did create an AI that is competitive with OpenAI and Google's AI and other AIs, but the claim is that they did it for less than $6 million. And so a shoestring budget, they're able to create a product that is competitive with one that companies have spent billions and billions and billions on by using open source technology and not closed source. So a lot of critics are very critical of the validity of these statements, saying that they use more money than that. And then some of the other critics are very critical of open source because it's too reckless. You can't control the state at which you grow AI because right now in the United States it is very heavily regulated and they are growing AI at a slower state on purpose because they don't want AI to grow too fast, uncontrolled, because they're worried it will. surpass the ability for humans to control it if we don't do it in a steady environment. That's why when you have these AI projects in other countries that aren't as regulated, there's concern that they'll just push right past that without caring, and the AI will uh, move too fast and be out of U.S. Human control in those other countries. Having said all that, Deepseek did this, and so because Deepseek was able to do this for just less than $6 million without all these fancy chips that everybody else has used, Nvidia stock plummeted a huge amount. Microsoft plummeted a good amount. A lot of stocks plummeted a good amount. Was it one GE Vernova stock I've been bullish on plummeted a good amount because that's a stock that is meant to be powering all these data centers and AI centers. And if we can do it so cheap with open source, then we don't need these data centers and we don't need um, that the energy companies to produce these much power that fast. So, there's a lot of trickle effect and ripple effects that go throughout the market here. But yeah, it's been talked about. You could get it on the Apple Store, still DeepSeek. You could download it. There's just a lot of hype around this. There's a lot of people saying that, hey, DeepSeek's actually using chips that they moved around the embargo because right now it's basically a trade embargo that the United States is restricting what chips you can actually sell to companies in China, and they restricted some of NVIDIA's higher end chips, and a lot of people are saying DeepSeek is actually smuggling these chips in and using them, and so it's a larger price than the 6 million price tag they give, or that they're using a lot of these older chips, but just a whole lot of them, so it's still a higher price tag, and they're not coming forth with the numbers. There's just so much about this that I feel like we're gonna not hear the truth for a while here, Brandon, one way or another. But nonetheless, it changes the game. It changes the
Yeah,
game. And so, what do you do? How do you invest? Or how do you take this in? And what do you do about it? Go ahead.
I nothing yet. Nothing. People are overreacting. Let them overreact. Just sit on your hands right now. We don't know enough. There's look. We got limited visibility already into the books of these Chinese companies. We've got more visibility into the companies that are on the stock market and that are publicly traded. We've got very limited, if even none, visibility into the book of the Deepseek company. We have absolutely no idea if they're telling the truth. No clue whatsoever. No clue how much money and subsidies the Chinese government's given them. So they could say this has cost us $6 million, but yet maybe the taxpayers of China it's cost a lot more. You don't know, right? So it did, I think there was kind of a rational panic in the stock market. I mean, one of the things that people are buying Google for, and we've talked about this in the past, is if the federal government was to break up Google, they might actually be worth more. One of the companies that would come out of that would be the chip maker portion of Google, because a lot of people don't know that Google makes their own chips, but they do, many of them at least. And I've heard estimates of 10 to 20 billion dollars, if I remember correctly. Don't quote me on that. I don't have numbers in front of me. That company by itself could be worth. Um, so I think people were looking at that and saying, "Oh, this is a competition to Google's chip making, Nvidia's chip making, Microsoft, whatever they do." I don't even know if they have a chip making company, to be honest with you, or portion. But and they were rightfully, I think, questioning that. Now to sell the stock, I think that was an overreaction.
Okay,
We
I
don't
got
know
yeah.
yet. We don't know.
We don't know.
And if it is true, if they could do this for $6 million, it will hurt Nvidia, obviously. It's going to be better for everybody else. So why not let it happen? I mean, the tech sector might not like it, but you know, infrastructure for security and everybody else is going to be a benefactor.
So
And
let me go over some things because you mentioned Meta and Microsoft, right?
right.
So Meta release an instance of Microsoft, and so let me talk about Meta's AI. Meta's AI chatbot surpassed 700 million monthly active users in Q4. That's up from 600 million in December. So that's actually was January. Sorry. Zuckerberg said he expects his Meta AI to reach 1 billion users this year. Once a service reaches that kind of scale, it usually develops a durable long-term advantage, is what Zuckerberg told an analyst on Wednesday. The emergence of Deepseek, a high-performing open-source language built model built by a Chinese lab for a fraction of the cost of its American counterparts, validates Meta's commitment to an open source approach to AI, Zuckerberg said. That's a quote from Zuckerberg. Meta has been pushing its family of Llama branded LLM models as an open source alternative to technologies from OpenAI and Google. There's going to be an open source standard globally, is what Zuckerberg, again, quoting him here. For our own national advantage, it's important that it's an American standard. Meta has finished training a mini version of Llama 4 and training for a larger version of the LLM, and it's making great progress. So Zuckerberg's actually a fan of open source. He believes in it, and that's what's fueling Facebook's open source. And they're making a lot. They're making billions off of their AI already.
which is why my stocks went up. Well, my overall uh portfolio went up this week when most others went down because I hold Meta and Meta went up. But
So yeah, and then in
yeah, I'm
regards to
stock for it too.
Microsoft, go ahead. Sorry.
Yeah, no, I agree with him.
So in regards to Microsoft, Microsoft shares slipped 2% on Monday. Because of the DeepSeek news that came out. DeepSeek and came out, made all these different news. It said it was more efficient than models from major U.S. companies with their R1. It outperformed OpenAI in some tests. And so that's a huge factor because Microsoft and OpenAI are in bed together. They are combining their software. Microsoft's heavily invested in OpenAI. Bill Gates is working hand in hand with Sam Altman, and so that's why Microsoft took a hit. They're working together on this, and if you're able to do one a lot cheaper, then why do we need OpenAI? And especially if it's showing that it's actually able to produce something that's comparable. So when I see all this, I get a little concerned for the American companies, but then I realize that we got Zuckerberg here and he's doing the exact same thing and he's actually creating competition for them.
And the residual effects of this too are going to be them struggling and scrambling to find cheaper ways to do artificial intelligence and these chatbots. And the benefactors of that will be the consumers and the businesses that are using these things.
Yep. And Meta's OpenAI basically is covering the losses for Meta's Meta Reality Labs division,
Yeah.
which is still losing money. But Zuckerberg loves that. I don't think he's the owner, founder of the company. He's not going to stop that anytime soon. He loves
Yeah.
that. That's his baby, and as long as he can afford to take that loss, he will.
Yeah, and he structured his company in a way that he has no reason to ever fear losing his job.
Right.
Yeah.
So that is what it is. But those, I mean, that's a lot of stuff we covered because there was all this big news that happened this past week. How I'm looking to invest, a lot of people jumped in Nvidia. There was $585 million of retail investors buying Nvidia the very next day after the drop. And then as we go forward into this week, are more people going to buy Nvidia? Because I'm calling for Monday to be a red day unless something other news happens that I'm unaware of. I believe Monday's going to be a red day. So do we buy Nvidia again because it is down to 119? Is that one we're looking at? Apple's still hanging around 233 with these tariffs that are going to take effect. Do you sell Apple now? Is
No,
that something we do?
no, you don't sell it because of this.
You don't. Okay, so you're
I,
keeping Apple because
I
of it.
wasn't, I'm not happy about the tariffs, and I do think it's a headwind. Don't get me wrong, but it's not nearly big enough to sell any equities
What
over
what about
these.
Amazon? Because a lot of Amazon products are made in China.
Still the same. I'm still
Still the
not.
same.
Yeah, until this gets worse, which it very well could.
Okay, so now we're giving advice to our listeners. We covered the news. We covered our opinions. Now we're saying, hey, you're saying, don't sell, don't sell, you know, but you're not saying buy either,
Yeah, yeah.
and
Generally, 10 to 30% tariff hikes do not have a material effect on the overall economy. And then, but once you start getting above that, then when things start getting bad. So,
Here's why I think. Nvidia goes below 100. I'm backing up the truck and I'm dumping my money and I'm buying.
Okay.
I'm buying heavy. And when I mean heavy, I'm buying heavy.
So then you're betting that Deepseek is full of crap.
Not necessarily. I'm betting that Nvidia is going to continue its revenue for the next 3 years, no matter if DeepSeek is true or not.
Yeah, they got a lot of contracts in place. So I mean, that's true. And then also Nvidia is a very innovative company, so they'll figure out ways to catch up.
And they'll pivot. They have the money coming in, so they have the cash flow. They can find a way to create the next big thing and move forward. So,
Yeah,
yeah, if Nvidia drops below 100, I'm buying.
yeah.
That's my call for this week. You know,
I might be there with you.
boom, two buys from Chinchilla Bacon. You know that's going up if it goes below
Yeah,
100
yeah.
now. So there you go. All right, Brandon, we covered a lot. We talked a lot. I'm getting winded. Final thought.
I can't like I can't sit here and say sell all equities because of the tariffs, but I can tell you I don't like the tariffs. So, but don't panic if everybody else panics, and I'm sure they will tomorrow. I'm sure there's going to be a lot of panic selling tomorrow. Um, I want to see what happens in the next couple of months, right? The president that we have in office, and I don't want to be pro or con here. I don't want to be against or for. I don't want to play that game, but what I do want to say is that he has been very much a negotiating kind of president, right? We remember what happened with North Korea in his first term. You know, he went from threatening to bomb them and hilariously, I think, calling Kim Jong-un the little rocket man.
I remember that. Yes.
Bringing them to the table, and we got some deals, done, and they've fallen apart in recent years, which is unfortunate. But I think that this is probably going to be a similar situation with Canada and Mexico and China on the tariffs thing. I think we're going to have a meeting of the minds, and I hope that this is resolved soon. But for now, what's happened right now is not a cause to panic.
Gotcha. So yes, for my final thought, yes, Ontario did remove U.S. alcohol from all shelves in regards to Trump's tariffs.
Well,
That is
let me
true.
let me say that I don't know how they have the power to do that, but I don't know their government. But I also don't know how President Trump has the power to unilaterally push tariffs on Canada and Mexico when we've got NAFTA in place that was signed by Congress and passed by Congress. So that's another thing that's here. Is this going to be challenged in the court of law? Because it might be.
It probably will be. And NAFTA, if you're listening, you don't know what that is. If you're not as old as Brandon and I, that's the North American Free Trade Agreement.
Yeah.
Um,
And
so
that's
yeah, and it
legislation. That is the law of the land. So this may not actually work out.
yeah. And then when it says on there, I just reading the headline right now. It says, "Here's what could get more expensive under Trump tariffs," and they have a picture of avocados.
Yeah.
Just found that funny because of what you said here in the podcast. But yes, I'm expecting a red day on Monday. I'm expecting some buying opportunities. I'm going to be very particular. I'm not just going to jump into anything here. I am going to be very specific and targeted. But one I will be looking at is Nvidia. It goes below 100. I am buying. Just to let you know. And yeah, I'll be looking at other ones as well. Cooler if it drops below $2 again, I might buy that. I'm not doing a definite buy this time, and that's just because the overall stocks, some of them might actually stay depressed longer. So there are ones I'm looking at, ones I'm not looking at. We'll see what's going on. I do still hold Google as a long-term investment. Very happy with that, and it did not suffer as much of its counters the Mag 7 counter companies did off the Deepseek news. So that's kind of good that it held tough.
Yeah.
So appreciate that. All right. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good
Have
night.
a good night.